Hey everyone, Retire on Dividends here, back to make another update, late update to RODY. Um, so obviously today is Saturday, November 22nd. So we'll give the update as of the end of the week from Friday. So real quick, this tab is the sample tab. This is kind of where we run some numbers on the next plan to add to RODY. And I really, again, being how the stock market has been behaving, it's kind of a reminder to me to try to, especially using this strategy, stick to indexes, stick to what works. Don't get too pretty with your individual stocks that you don't even know, you don't even follow that much. You don't chart, you don't this, you don't that. The indexes, sure, they'll go up and down, but not like an individual stock. And again, these big swings kind of do affect how RODY can perform. So I will start moving. I already added IWM for the Russell 2000. I'm going to add the Qs. It's just a matter of when. I'm kind of hesitant now with how the stock market's been. But when I do it, it's going to be a year. So here's an example of 1 year out, December 18th, 2026 expiration. I was looking at this the other day. It was like a 585 price with the buy put not 20% below, but kind of closer, right? To minimize, I'll say, the downside, which this would require more out of pocket, as you can see. But it only gives a $2,000 downside risk, which is good, right? If I did 20% on the price like this, your downside risk would be pretty massive. So again, this is just something I'm considering. And obviously, I would sell the call right away, maybe at a higher strike too. I don't know. But it's not cheap. It would require $6,458 out of pocket on the synthetic, and then an additional $2,000 possible downside. But again, I'd have it for over a year, and I can make some serious bank on those covered calls. All right. But yeah, maybe I'll do it next week. Maybe I won't. We'll see. All right. I'm not going to go through the definitions. I will talk about the rules. Again, this is with the help of a lot of people from the Discord, mainly SB and M Cheese, who, by the way, they will be on the morning show Monday morning, 6 a.m. If you guys have any options questions, those are really the two experts who kind of run the show on the options trading channel. And if you have any, questions for them, also SB daughter, who's very good at options as well. I believe she does the RODY trades similar to kind of, how we do it, but a little more, we'll say safer, not as degenerate. So, a lot of people may want to hear that, her strategy there. So yeah, tune in Monday for that. But anyway, here are some rules. I added SMA rules. I know I'm not a chart guy. SMA is simple moving average. So basically, what I do is on Thinkorswim, I add simple moving averages, and there's several of them. I forget. We'll just focus on the red, which is the 200-day moving average, and the blue, which is the 50-day. Again, simple moving average. There's a couple moving averages, by the way. And then, something that M Cheese told me is it's good to look to make sure the current price is above the 200-day SMA. So if we look at the 200-day SMA, it is at what, like 85. The current price of, this is Robinhood, by the way. The current price of Robinhood is 106. So obviously check for that, right? And then we look at the, the 50 SMA. Your starting position should be at or below the 50, right? 50. So the 50 is at 120. The current price again is at 106. I think I said that right. Who the hell knows? But yeah, but I know, whatever, right? But just some basic things, good starting points. What does any of this mean? I don't know. We could find out. We could talk about this on Monday. Also, not a new rule, synthetic strike. When you start a position, try to do close at the money, close to the money, things like that. Only add to existing synthetic positions. 20% plus drop. That's for the individuals. I'm thinking 5%, maybe 10% for indexes. Not quite sure, but again, we'll subject to change. What about the protective put? We said at least 20% below synthetic strike. But again, even this would be 5%, around 5% for the indexes. All right, because we're going to treat them a little differently. Expiration date on leverage funds. Yeah, we're not playing around with leverage funds, but just kind of note, you know, because they're not good long-term plays due to the daily reallocation. So if you're going to do them, you know, keeping them in the shorter term would be wise. I did update this expiration date on non-leverage. I'm going to do 12 months. I just feel better about it. You know, I'm not saying you have to do that, right? But I'm just going to feel better about it. When selling calls at a strike more than 10% under the synthetic, use diagonals or limit or under to limit. Diagonals to limit. Did I stop typing? Or under 0.2 delta. Use diagonals. Just use diagonals. There you go. And then roll in the money calls that go over 95 delta or extrinsic under 10. So basically, if you're going to roll a position anyway, what I've been trying to do is wait till Thursday or Friday when the extrinsic value is minimal. Therefore, rolling it is a little cheaper. The buy to close part is cheaper, if that helps. All right, let's keep going. I also added a tab for the VIX. You know, people always talk about the VIX. I'm like, whatever. What the hell's the VIX, right? So basically, the VIX is right now, it's at 23. And I added a little chart here that I got online. So when it's between 20 and 30, you can see moderate uncertainty. Investors are cautious. So I got a little VLOOKUP here. So when it hits a certain range, all right. So right now, the VIX range is telling us it's moderate uncertainty, and then investors are cautious, expect some swings. All right, whatever, right? We'll keep an eye on for that. Also, watch list. I'm not going to go through that because we kind of go through that all the time. I did not put any screenshots. All right, now let's get to the trades. All right, open. So open, no new positions. You guys know, you know, this was the first RODY position we started, and we have about 6 contracts. Open also, they had declared some dividends via stock, or I don't even know, man, to be honest. But you'll look, if you own Open, you got some funky stuff going on. You got some Open with some letters in there, which we'll see what it looks like on Monday. Also, the options chain are very, I'm even told, like Robinhood, people are having trouble rolling their position or opening a new position. But, you know, think or swim, I haven't had a problem with that. But it does look weird. The options chain does look weird. All right, so as far as open, I did have a covered call, an $8 strike. This expired worthless because open closed at $6.75. So obviously, well, I'm sorry. I rolled it. I did roll it. And I rolled it to next week. And it cost me 5 cents to close. And the premium on the new was 16 cents, which pretty bad premium, but still a 106% annualized yield, right? Because usually, you know, we'd get more, but I'm still, open has dropped substantially as of late. So unless I go lower than my synthetic strike, then I'm going to be getting lower premiums. But, you know, we'll see how it goes. But I'm not worried about my open position. I'm worried about others more so than open. For the week, I generated $32 from open covered calls. How's the synthetic doing? Again, I paid $1,200 for the synthetic. If I sold it, if I just closed out the synthetic and I moved on with my life, I would make $333. So that would be a loss of $867. Which, whatever, man. We got time, right? Because this expires on May 15th. Extrinsic income tab. There's nothing to cover here because I'm waiting for a good example more so to track it. it's not always going to be an open. It could be on another fund, but for now, I'm not, going to add anything. All right, so let's look at SOFI. SOFI, we have, again, nothing new on the synthetic side. We got 5 synthetic positions. Total expense out of pocket, $2,200. All right, let's look at the covered call side. We got 1121 here. A lot expired on Friday. I rolled 2. Let's see. So I rolled a few. I actually rolled one to a 27, right? I did this on the 17th, and I ended up, where is it? Oh, here it is. 27. I did it on the 20th, and I closed it on the Friday, right? I didn't put it. Friday was what? The November 21st. So if you look, obviously I did it cost money to close, but I got $199 and then paid 25 cents to close it. And you could see that annualized yield is ridiculous. But anyway, SoFi took a dump, right, on Friday. SoFi is at, where is it? $25, which is not, that was a surprise. SoFi has been doing really good. But so what I did is I have a position at 27 for next week, and then a 28 and 29, which I actually went out even further to December 5th. But you'll notice that's only 3 contracts, right? No, this one I did not close. Oh, I did close it. All right, so I only have 2 contracts open. I have another 3 without a covered call because, again, this is probably dumb of me, but SoFi dumped pretty bad on Friday. I'm thinking Monday's going to look a little prettier, so that's why I wanted to wait to sell covered calls on Monday. We'll see how it works out. If it opens up red, yeah, I'm probably still going to sell covered calls. But, very low delta and very probably low premium. But again, we'll see how it goes. Also, yeah, I wanted to grade these out too as we go because I always forget. All right, so here's the open one. Yeah, I didn't feel like going live today. I just had a long night trying to recover, too old for this stuff. Let's see. Let's hide these because I keep getting confused that I have more. All right, so we'll close that. Okay. All right, so total premium I collected for SoFi this week is $170. Not bad. Not great. Not bad. Now we look at the synthetic. Now the synthetic's taking a hit, right? Because it's a $20 average strike, and SoFi's at 25. So the synthetic, of course, it's going to be down. Again, I paid $22.04 for the synthetic. It's now worth $917.50. Again, if I closed it basically as of Friday, so I'm down currently 1,286. But again, this expires on May 15th. Elf, what can you say about Elf? Well, nothing really that fantastic, but I do still have the 1 overall synthetic, but I do have the long call. Remember the one I got assigned on the put side? I still left the call open because I'm going to sell calls on this. But again, since I don't want assignment, I have to sell very, 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 very low delta calls. And let's take a look. I did that this week. I did, where is it? Here, 1118. I sold a call, $81. At the time, Elf was at 73. I went, 10% out of the money. The delta on that was under 0.1. And it paid me $23, which yielded me 26%. So this is kind of what I'll get. Again, it's not making bank, obviously, but I'm playing it safe. Since I have the long call, which, by the way, if I closed it, I wouldn't get anything. I'll show you how much it's worth in a second. So I might as well just keep making $20 a week on it until it expires. That's my thought process, at least. I know, is it more work than what it's worth? No, not really. $20 is $20. $5 is $5. All right. Anyway, I also, when I opened the new position, it's at 75 strike. I did a 75. This thing was essentially expiring worthless. How much did I pay to close it? I didn't put, yeah, it's probably around a penny, but here's the, I got $63 to roll it, essentially. Annualized yield 47%. So for the week on ELF, I made is that right? 286. Okay, because I did originally open the 75. Okay, in the beginning of the week. All right, so yeah, that's good money for ELF. Holding wise, yeah, see the buy call, the long call, the 125 that expires in January. It's worth a massive $18. So why would I sell this for $18? Because 1 week call I can make 20 bucks. So I'll just keep making 20 bucks, 20 bucks, 20 bucks. And again, if I get in danger, I'll just roll it out and strike price up and out. And then I'll be good for this position because I want it to go up, but ELF is going down. The stock market's been going down. It's been a little rough time here. But anyway, my ELF synthetic position, I did pay out of pocket $2,144. The current value is 405, so unrealized is 1,700. Robinhood, what can you say here? Disaster. My synthetic positions started at 145 and 141. Robinhood has done nothing but go down since. They're now at 107. Covered calls are a real struggle here. I did already start selling calls lower than my synthetic cost, so I had to do low deltas. So you could see this week I sold a call for Friday, 11/21, 130 strike, 13% out of the money, 0.1 delta. I got a massive $45, and this thing expired worthless. Great. Did I have ELF calls I have to hide? I did. All right. Keep forgetting. Gray them out. And then we hide them suckers. Boom. All right. So let's go to the Robinhood calls. So yeah, I made 45 bucks. That thing expired worthless. And I sold a 135 strike. I went 17% out of the money and did a 0.11 delta, but I did go out to the following week. So, to get a little better premium. I mean, I made 75 bucks on that at least, and it yielded me 21%. I know these yields are not very impressive, but I am trying to play it safe because I know, Robinhood, it can tank, it can jump up too. So I don't want to get caught, in the middle there. So the income for Robinhood this week, again, nothing spectacular, $120. The Robinhood side piece, I did not add to it. We still just got the one, which is actually, it's only 6% out of the money now. So, but again, as this gets closer, I'm not going to want assignment on the sold put. So I will try to roll it if needed, unless it expires worthless. But I'll probably just roll it anyway, even if it's not in danger, just to collect more money. Because again, you see that Robinhood position it's quite the struggle. My cost basis is 142.50 on average. The synthetic cost me 3,300. Current synthetic value, I'd pay to close it to pay 2,000. So essentially, that's a unrealized of 5,347, which it sucks. But again, we'll make that on the calls. All right, I have not even worried about it. I mean, it sucks. I don't want to be in this position, but I'm not worried. Robinhood's pretty volatile, so we will make money on the covered calls. All right, Palantir is not doing too great either, but the stock market's not doing great, so I can't be too surprised here. Again, I did start the position at a 190, and then I added a 180, and you could see Palantir is now at 154. So yeah, a little rough there. So let's look at the calls, see what I was able to do this week. I had two expiring on the Friday. I think I rolled one of them. Yeah, I let one expire worthless, and then one was rolled. So the one that expired worthless, that was a 190, and then I rolled the 185. I actually rolled it down because selling a call 185 wasn't paying jack. So I did roll it down to 175, which is still 12% out of the money, under a 0.1 delta. So you would think this is safe. It did pay me $56, and Yielded me only 18% though. So again, not anything too spectacular there, but I'm learning. I'm also learning. So, I'm not gonna be too brave. Again, if I did a diagonal, which is a sell call, buy call with a further a strike price above the sold call amount, then I would go a little more aggressive on the sold call, but then the buy call would eat at the premium because that's an expense. So it's either I sell calls way out of the money or I do a diagonal, which is the better strategy. I do not know, but we'll find out in due time. Palantir Holdings, again, Palantir's at 154. My synthetic average is 185. So you would imagine it's in the shitter. And, to recap, the expense on the Palantir position, 3,200. If I closed it today, it would cost me 990, which would make me overall down 4,200. All right. Now, one of my best positions, probably now my best position is IWM, which again, this is the index. This is the Russell. By the way, IWM also has daily options. So if I wanted to sell calls on this position on a daily basis, I can. However, I have a job, so I'm not. 1 week that's enough work for me. But anyway, I have one synthetic position for them. I did a 235 strike, and yeah, it's good to go. The buy put, the downside protection is hit at the 190. Covered calls. Let's see what I did this week. I sold a call at 235, and that was 0.48 delta. And it ended up, on Friday, they were up. They were above they were above the strike price. So I had to pay $1.75 to close the position. I ended up keeping 40% of the premium. But the new position, I rolled it to a 235 again, even though that's in the money. Again, I'm rolling it at the money because this strike is equivalent to the synthetic strike. So I'm not worried if this gets blown through, then that's synthetic is going to make some serious money. And this will be in trouble, but I'll just roll it. It's not a big deal. I'll roll it up and out. So for now, as the market trades flatter down, this thing is going to make me some money. And you can see it made me $408. But we'll see what happens next week. That's an annualized yield of 89%. And I did make really good money on IWM this week, $527. All right. Now, if we look at the synthetic, out of pocket, I paid $12.94. Current value, $13.84. So here you go. Finally, a position I'm up on a synthetic, $90. Again, if I decided to just close out, this is what I would cash out at essentially, which I'm not closing it out, but it's good to have an idea. All right. So the weekly recap for the RODY positions, I made $1,301 and total capital used $34,644. That is a weekly return of 3.76, and that's an annualized return of 195%. If I got paid this on a weekly basis, that would be an annualized income of $67,652. Not enough to retire, but yeah, just to give you guys an idea. All right. Monthly income, obviously I'll update that at the end of the month. And then of course I did update this and I shared it. Actually, I didn't post it on YouTube. I probably should, but it is on my X. I did share this, just a cool way to look at the income, get, an eye catcher for people in case they're curious. So yeah, it's good money, especially since we're playing it safe. I mean, IWM kind of saved my ass, but yeah, we'll see how next week goes. Hopefully we'll have a better week. Active holdings. So this is basically the summary. This is the end result. This shows you, synthetic collar. This is how much I spent on the buy call, the sell put, and the buy put. All of them together net to this expense. So if you look at the total, cost me about 15,000, right? But let's look at IWM alone. All right, let's single that one out because it's a brand new position. So again, I paid $1,294 to start that position. And then I sold calls right away, right? You could see I sold calls. So far, I brought in $527 from selling calls. The downside risk, though, is the difference between the sell put strike and the buy put strike times 100, because one contract, right? So the downside risk is $4,500. But if I net the expense of the synthetic with the covered call, I'm only down 767. So I could flip this green probably pretty quick. But the total at risk with including the possible downside is 5,200. So again, the goal is I want to flip both of these green in due time. But again, the market is just not behaving. So we'll see how that goes. Exposure, this is a percentage of, as far as RODY as the overall portfolio, they are 17% of the portfolio. So the synthetic value we showed on the other tab, 1384. If I cashed out the synthetic, I'd be up, what, $90? So great, wonderful. The net, if I add the covered call income, then I'd be up 617. So return on investment for IWM, I'm actually up 47%. Now, if we look at some of these others, they're not doing as good. I mean, Open is. In fact, Open, one more trade or two more trades, and I'm green on the profit loss side. And then I'll just work on the total at risk. So Open has been really good to me. I know everyone's like, what the hell are they doing with this dividend thing? And it's annoying, but I believe it's something similar to what, AMC did, Diamond Hands, remember MOAS, mother of all short squeezes. Remember that? It's a way to maybe stop or make the shorts, the people that are shorting their stock, cover the stock because, when you short a stock, you're essentially borrowing a stock, selling it, and then buying it back at a cheaper price, hopefully. But if they can't buy it back at the cheaper price, then they're stuck, right? Then they're stuck. So they either have to take the loss or, or don't cover it, and that's what happens, I think, a lot. They don't cover it. But if they pay a dividend, then they'll have to cover it, right? I don't know. That's, again, who the hell knows? We'll see. Didn't work for AMC anyway, so it's probably not going to do anything, but whatever. Open, the ROI, I'm at 25%. SOFI ROI positive 4%, but ELF down 50, Robinhood down 93, and PLTR I'm down over 100. So, I know the way that's presented does me no justice, but again, I'm not concerned because I still, again, look at the expiration date, 5/15. So even though I'm down, my puts are in the money. I'm not worried about early assignment because these are still 7 months out, right? So, the likelihood of early assignment, unless it goes way in the money, then of course anything's possible. But again, I'm going to be trading calls the whole time. And again, since it's weekly, I expect to make again, I don't know the timeline. We'll see. This is all new still, but I expect at least make, the flip. I'm going to flip both profit and total at risk row green. You can see my biggest position is Palantir at 33%, and of course Robinhood at 24%. But my plan now going forward is I'm not going to add to these individuals for now, just because the way things are going. Unless it gets really bad, and I think I should average down. But my plan is to either continue to add to IWM should it drop, or start a position on the Qs, which, as I talked about in the beginning, again, I want to do more focused index based. I really think this strategy would work much better when it comes to just trading the index. Total capital saved, what this means is basically if I was selling covered call, if I was doing the wheel, essentially not doing the synthetic, then it would be much more out of pocket, 80,000 more out of pocket. So again, that's a huge factor to me. That's more than my account value, right? My account value was almost hitting 80%. I'm not 80,000, but now it's at like 65. So I dropped about like 15,000 in value over the past maybe 2 to 3 weeks. I don't know. It's been a rough one, that's for sure. All right. Anyway, let's focus. Let's go to the wheel because, as mentioned in previous videos, I'm done with the wheel. I'm focusing on the RODY. Again, what is RODY? RODY just represents a new way of trading options, which basically means you do whatever the hell you want. But for the most part, it's a consistent strategy, but you throw some loopholes in there. The wheel is pretty straightforward. you sell puts, you get a sign, you sell calls, you get a sign, you know, back and forth, back and forth. But since, you know, the wheel does cost more capital, I'm gonna try the other method like full time, and I'm gonna see how it does. Right now, obviously, you know, the worst scenario is kind of happening when I started RODY. So it's actually a good thing because it's testing me right away to see, all right, even in this god awful market, or, you know, even though I picked stocks that just are tanking, can I still flip this into a profitable trading strategy, right? So we'll see, right? I think I think so, but again, we'll see. All right, TSLL. I did roll covered calls down in strike 15. They actually almost expired worthless because TSLL did drop to 1543. So these two did get assigned. So again, this is the goal, to get rid of all of the wheel. So I'm down to 300 shares, and you could see since they got assigned at 15, that is a capital loss of 400 and 300. But in reality, for the overall position, it's not, because my net cost basis is 1043. And again, I know I don't use this normally. I say I never use it, but when I'm just trying to get out, it's okay to be aggressive, because I did make 7,958 in premium. So if I net the capital loss total, I'm still up 4,108 on this wheel. All right. And then everything else is for next week, the week after that. And then, oh, did I hide it? I forget. Did I hide the IWM calls? I did not. See, I can't remember anything. All right, do that. Let me know if you guys have any questions as it relates to RODY, as it relates to the wheel, or anything. But the goal is to hopefully show you how a different type of strategy works. Okay, let's go to TNA, because I'm TNA Dynamite. All right, so I sold a put. This is the last remaining put, $35 strike. TNA closed at 40.25. This thing expired worthless. And then I rolled my 45 strike down to 40, again in the money, because I wanted to get assigned, and I might as well collect a little more premium. So that paid me another 250 bucks. So yeah, so that's some good money right there. All right, so let's gray this out, and then we shall close it up or hide it. All right, so yeah, I'm just left with the 100 shares, which again, I tried to move the expiration date to earlier, but it wouldn't. I don't know. It was giving me some weird messages. So I'm like, you know what? I'm just going to roll the strike down and leave it there. All right, open. This is unusual. Check this out. Cover call, $6 strike. It expired Friday. They closed at 675. I mean, after hours, I don't know what after hours was, but I'll check it. It was down, but only to 672. So 672 is greater than my strike of 6. So you'd think I'd get called away. However, I did not. I still have my 200 shares. So this right here, this expired worthless. So I've never had that happen. But there's a lot of weird crap going on with open lately. So this does not really surprise me. All right. So I also have a $6 call for next week. And yeah, again, aggressive calls because I want to get assigned. So I'll sell another call on Monday. I'll have $100. I'm sorry, 100 shares to do so. But yeah, I didn't roll that other position because I thought it was going to get assigned. It did not. This one did get assigned. ST, I had a strike of $1. It closed at 102. So guess what? Bye-bye. This got assigned. All right. All 8 contracts, 800 shares went bye-bye, bye-bye, bye-bye. Bye, 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 bye. Oh. All right. So let's hide this. And what's the end result? Well, again, not good, right? Because I got assigned at 250, then I got assigned at 3, and then I sold it for $1. So in the end, my cost basis was 275. Premium I collected was 1504. If I net the 1504 with the capital loss, I actually ended up losing $46 on ASST or ST, which again, I call that a win because this thing was a crapshoot from the beginning. Just a experiment, you know. The $46 was worth the learning experience. So now I will hide this sheet and I could finally move on. All right, NAC, another one got assigned, dollar strike. They closed at 149. Boom, boom, boom. How much did I get paid? $700. Oh yeah, got assigned. Bye bye. So yeah, we do. We make this gray, and we can hide it. Again, I was playing this because you never know, it could pop super green, but I decided that my focus will now be on RODY 100%, and I will become a better options trader because of it. You can see my NAC position. I did originally get assigned at 2, and I sold it for 1. So that is a loss of, 1. Oh no, it doesn't have the number of contracts. Yeah, it's a loss of 1,000. Or maybe I did. I don't even know. Maybe I calculated ST wrong too. It's not multiplying by. All right, so let's do times 10. Yeah, so because I lost $100 per contract, so 1,000 total, and I made 900 in options premium, so I lost $100 total on NAC. Again, another failed experiment, but it's okay. My leaps, I only have 3 leaps on, and they're all on open, and they're very crappy. No point on even talking about them, to be honest. All right, so weekly income. Again, is this fair? Not really, because I'm going aggressive. I'm selling in the money. And also you saw I'm losing capital in some cases, but it's okay. But however, I did make $1,600, $1,685 in options premium from the wheel alone. So, between the 2 accounts, I had a pretty good week as far as options income is concerned. But again, the plan is to get rid of TSLL, TNA, and open here. The leaps, I'll have to move over to the RODY tab, the RODY spreadsheet, and then the focus will now just be on the RODY file, and we will work from there. At least that's the plan. We'll see how it goes, right? Because, it's going to be quite challenging to play catch up now, right? Since we're underwater on a lot of them. But, the market, it's selling off. The sell-off may continue, but it'll come back up at some point. It's just a matter of when the timing of it is, and trying to be careful along the way. All right. So yeah, that's pretty much it. I didn't cover my allocate. Yeah. So the allocation again, the index wise 17%. I want to add Qs, so maybe that'll be another 17%. Maybe we should do like 50% indexes, 50% individuals. What do you guys think? Right now, again, I already have 5 individual stocks. Once these become, once these expire, I probably won't have 5 anymore. I'll probably minimize it maybe to 3. So maybe I'll do 3 indexes and 3 individuals. I don't know. What do you guys think? All right. So that's pretty much the update on RODY. So let me know if you have any questions. As far as RODY goes, again, I'll try to do a RODY update 2 times a week, maybe 3. It depends on how I feel. Sometimes I just don't feel like talking about anything but RODY, which, if it were up to me, I'd only do RODY, but I do, I have to cover some high yield ETFs because, it is still good to educate on how some of those funds are working. Plus guesstimating is fun. I do have fun doing that. So, but yeah, I think that's pretty much it. So as always, this is not financial advice. I am not a financial advisor, and this video is for fun and entertainment. So hopefully I had fun. Hopefully you're entertained. If not, I don't know what to tell you. Come back later. Like I said, real quick update for the Monday morning show. We'll have some three options traders on there. So come join, ask them questions. They all know more than me, so you'll get a lot more information than what you normally do. So if you're not there asking questions, it's just going to be me asking questions. But I think it's good to have the community ask the questions. But yeah, so stay tuned for that. Obviously, tomorrow morning is I'll wait because I gotta take my I don't even know about Guestimania now. Gotta take my son and his friend to baseball. Guestimania, maybe I might have to do it at like 6 or 5:30. I don't know. I'm talking to myself now. But anyway, I think that's enough. So if you guys enjoy this content, please hit the like button. If you have any questions, leave that in the comments below. Outside of that, we'll do a keyword. So even though it's not a morning video, we'll do a keyword. So if you made it this far in the video and you want to prove it, you gotta say the keywords. Keyword is, I'm gonna go with the Q's. So the keyword is the Q's. For those of you that do not know, everyone knows the Q's. I won't insult your intelligence, but again, since I'm looking to add them to RODY, they are the keywords. So if you made it this far in the video and you would like to prove it to myself and all these other suckers out there, you got to type in Q, and then Q. All right. And that's it. Then we'll call it a day. All right. Thank you all for watching and have a good day. Later.